We have Sohini Andani, who's fund manager at SBI Mutual Fund, joining us to talk about the SBI BlueChip fund and its performance for the benefit of our viewers who are invested in perhaps this fund from the house of SBI. Sohini, great to have you on the show. Thanks very much for taking out the time. First up, really, what's your approach to managing your portfolio given the volatility? It is a large cap fund indeed.
BlueChip is essentially a large cap fund where we can take some limited exposure to mid cap up to maximum of about 20%, and this is benchmarked to BSE 100. What we are doing here is that we are buying a combination of the companies which are the consistent growth performers and also some of the emerging names which come up in the sector. And typically we buy this growth for about 3 to 5 years perspective. So we are not too worried in terms of a short-term volatility which happens in the market. What the volatility does is that it creates the FIs flows get impacted and the stock price are volatile in the short time. And we believe that that creates an opportunity to invest for us at an attractive price. So that's perfectly okay to manage portfolio in this environment.
Well, are you seeking opportunity, within this fund in cyclicals, or is the bias still with defenses? Because we've seen the value play there.
We have been, increasing our exposure to cyclicals in the portfolio. We've been doing that gradually. So we are more positive on industrials and on autos in terms of cement, whereas in financials we are still underweight. So it's a mixed approach. We are also underweight IT, which is a defensive sector, while we are overweight on pharma. So it is a combination of both, but overall I would say we are increasing exposure to cyclicals, given that economy will improve from here and the growth should pick up.
Where is the focus of your strategy shifting to? I mean, if you were to indeed look at new age sectors or sectors that will benefit out of the economy, is it infra, cement, PSU banks? Do you like these sectors at all?
Infra, cement is, so infra and cement is where we are, as I mentioned earlier, that we are increasing gradually the exposure. Whereas the PSU names, we've not taken any, we have taken some exposure to stocks like Coal India or to OMCs or something like that. And we also have some exposure in PSU banks also, but it's still not big. Not very meaningful, I would say.
Do you think the turnaround would sustain if you are looking at this sort of diversification?
While that is true to some extent, and it will depend upon which sector that PSU works in. So it will be very stock specific. So some of the, say for example, the oil companies might end up doing more capex. But their profitability will depend upon, upon the cycle and the products where they are there. Same thing for the other companies also, industrials also. So we rather play that these are the capex. The capex may happen by PSUs, and we may play the companies which benefit out of these capex. So the equipment suppliers or the consumable suppliers to these PSU companies. So I think that will be a better play, or in companies in the T&D sector, which supply to power grid or something like that. So I think there we are more positive than playing PSUs per se.
Okay, and where in the upcoming earnings season do you think sectors will show a leg up or a turnaround?
I think earnings would look better for the oil companies, the PSUs as well as for Reliance, given that the refining cycle has been good this quarter. Also for the refining, the oil marketing companies, this will be a first quarter where there will be no subsidy burden at all for them because we've gone to the market formula. So I think the quarter looks good for public sector as well as private sector oil companies. Industrial companies, some of them for the base being lower or the last year first quarter being very bad, this quarter may look good, but I think it's still far from where we would want to see them. For the rest of the sectors, I think in some of the auto and select names like Maruti, it may look good. I mean, generally, the auto companies and some of the industrial companies should benefit on the margin side much more because of the cost inflation coming down, though the volume growth still doesn't seem to be picking up much. But otherwise, and private sector banks have been a consistent performer, so there we can see 15 to 18% growth happening for them as well. Otherwise, for the rest of the corporate India, we see a very muted earnings season.
All right, we'll leave it at that. Sohini, thanks so much for taking the time out and joining us and giving us that perspective. That's, of course, the view from SBI, a blue chip fund, and the fund strategy as well. They are selective on the turnaround as well for the earnings season, as it should be the case, really. Not too many people expect the earnings season to be that great. In fact, let's get in one more fundamental voice on that. Parag Thakkar, Head of Institutional Sales at HDFC Securities, joins us right now on the show.